Hello and welcome to this next presentation here at ABG Investor Day. My name is Simon Granat and I work as an equity analyst at ABG covering IT and tech companies. With us today, we have the pleasure of welcoming Christian Sundin, who is the CEO of Formpipe. And with that said, Christian, please go ahead and present the company.
Thank you, Simon. As Simon said, I'm Christian Sundin, the CEO of Formpipe. I've been with Formpipe since 2006, so quite a long journey for me. I would like to go through the agenda for today. So, Simon, if you can help me with that, thanks. I will have just a very, very short glimpse on Formpipe and what we do, what sort of company we are. But I also spent some time on a short recap of where we're coming from, the recent years and what we've accomplished. And then I will put most emphasis on what we're doing now. And we're actually entering a new era from the start of this year, where we have refocused for growth rather than transforming business model and improving margins. So we are in a very interesting phase of the Formpipe journey, and I would like to take most of my time for describing what we will do with that. So going for the next slide. Starting with Formpipe in very brief, we are a software company within content services. Very generic name, but mainly it's bringing good structure and order in digital information, very much like the ERP systems, but for words and documents and cases. We have our roots in the public sector, where public sector has been front runners in terms of traceability and auditability of decisions, public records, and so forth. That's where we have our roots. And today we're addressing clearly the public sector markets of Sweden and Denmark, and foresee going to other countries with that as well. And then we have approximately a third, and the most fastest growing part of our business is towards the private sector, with an international partner network, where we are actually a slightly different offering there, where we do document management mainly towards the ERP or banking systems, such as Microsoft Dynamics ERP or Temenos banking system, and so forth. We are today about 270 employees and are growing, recruiting, and that I'm coming back to that on why we're doing that. With the majority of the presence of people are in Denmark, Sweden, and UK, but also sales resources, partner support in US and Germany. Next slide, please. I said that I was going to go back memory lane a little bit and what we've been focusing on the recent years. And first of all, we've really pushed for shifting towards SaaS or subscription model revenue or contracts with our customers. And this graph illustrates the effects on that we're coming from yearly ARR numbers on SaaS on about 10 million a year in Swedish, now being well about 50 million in ARR coming out of last year in 2020, and we've continued to grow that significantly during this year as well. But you can also see the trailing down on traditional license sales, meaning coming from levels above 75 million a year in traditional license sales, we're now closing into 30 million on that, and that is of course 45 million coming straight out of the top of our revenue line as a company. So, but as you see, the lines has crossed, and now since the SaaS will continue to grow, and the traditional license sales can never go below zero. So we will soon start to see the real effects of this transition also on our top line numbers. Next slide, please. Underline even more, stressing the point even more on what we're coming from. Looking on this multi-year plan history, going back, you can see going for example, 2015, we had only 6% EBIT margin, and we only had 156 million in recurring revenue. However, we had a completely different revenue mix back then, with more consultancy and more traditional license sales. So looking on the net sales, the top line, the journey from 350 to 400 doesn't look very impressive. But we looking on the line recurring revenue, which is the strategy we have pursued, driving the recurring revenue. It's from 150 to 250, an average growth rate of approximately 10% a year during this time. So the part of our business that we really wanted to grow, we have successfully grown, and we have been able to combine that with improving margins, going from an EBIT of 6% to going up to 13% in 2020. And that is, of course, a real challenge to take out top line, replace that with recurring revenue, and still be able to improve the margins. So those has been our main objectives during this time, and we've successfully executed on that strategy and those objectives. Next line, please. Next slide. Yeah. And that has led us to the situation we are today, and enter this year, that we have more than 60% of our total revenue is recurring revenue. It continued to grow as part of our revenue, and we have grown that with an annual growth of 10% a year since 2016. That gives us the confidence and the stability and the cash flow generating of entering the next phase of the Formpipe journey. Next slide, please. And that is what I'm coming to spend the rest of my presentation on, a new strategy for growth that we initiated at the start of this year. Next slide, please. What we've done is that we've looked on where is the opportunities for real growth here. How can we accelerate the growth we already are, the tracks we really are growing, and how do we support that even better? How do we support our partner network around the world to really make sure that our strong network of certified partners get the help they need in order to drive our sales even faster? And we will do this purely through driving software as a service, SaaS and subscription revenue. And we will set out to complement the organic growth with some strategic acquisitions during this journey. Next slide, please. And we see that our company rests on two solid pillars. One is our roots, our legacy, and our where we come from and our heritage in the public sector, where we have a market-leading position in digitalization of Sweden and Denmark public sectors, and where we are very successful in doing that, and we see that that could be a journey that we take all over Europe, seeing with the acquired businesses all over Europe. We think that we could be the benchmark and the trusted advisor in the public sector space all over Europe for digitalization of the public sector. We see this as a solid, loyal customer base. We see good growth potential in it and good profitable growth potential in the public sector space. However, on a less fast pace than the private sector. In private sector, we see really good growth possibilities, where we see double-digit growth for sure, and quite significantly more than that as well. That the private sector, the 34% we see now, will probably over this period of time up to 2025, 2026, be more or less half of our business will be in the private sector. Even though the public sector will also grow, we see even greater growth potential in the private sector, where we see good opportunities and really strong help from our partnership with Microsoft, mainly towards the Dynamics platform that they are promoting in the cloud and in Azure, and also the banking system Temenos, where we really piggyback on their success of gaining market share all around the world, both in Europe and US, but also in other areas. So we will invest heavily, or we are already investing heavily in supporting the partner networks of Microsoft and Temenos to make sure that we get in there on every deal they do on those platforms. And we will do this yet again over the SaaS revenue line. Next slide, please. So that leads us to that 2021 will really be a year of investment. So we are increasing capabilities in where we're recruiting, and we think we will launch this during early in the pandemic phase. We set out for these plans, saying that hopefully we will be able to attract talent, and there will be talent to recruit in the difficult times in the world, but also believing strongly in that this is the time not to hit the brakes. Quite the opposite, according to our shareholders. It is time to invest and invest for growth, and we go for that rather than sit to wait for the pandemic to end and to hold on. So we push the throttle instead and go full speed ahead. We'll of course continue to focus on our existing customers as well to do great deliveries towards those, but we're really driving now a top line growth. And it is important to point out this will have a dramatic negative effect on the EBIT margins in 2021, where we're really taking on a lot of more capacity in terms of recruitment. Next slide, please. So what have we set out to do? Yeah, we will, during these years, 2021 to 2025, accomplish an average annual revenue growth of 10%. We will, coming 2025, have increased our share of recurring revenue even more of the total revenue, up to 70%. And since our business model is so scalable and the SaaS revenue are scalable, we know that even though 2021, the EBIT margin will take a hit, the scalability of the business model will gradually over this time take us above the current margins and all the way about 20% EBIT margin in 2025. And we also see that this business model is cash generating, it is scalable, and we will be able to continue to pay more than 50% of our profit in dividend over time here. Next slide, please. This slide is to illustrate how the SaaS revenue in more detail has developed over time. You see, as I mentioned before, below 10 million coming in ARR in 2017, going out on 55 million in 2020. And we can already now see the results of the investments we've done in the increased capacity in our partner network around the world. A lot of the 9 million you see in ACV in Q2 comes from private sector internationally. And that is to a large extent thanks to that we have been better in helping our Temenos and Microsoft Dynamics partners around the world. I'm not saying that you will see 9 million every quarter from now. I hopefully see quarters with even higher numbers on that, but it will be volatile, but we really clearly see the effects of the increased capacity, and we foresee higher ACV going forward than we've had historically on this. So next slide, please. And we've also been really successful in finding talents. We've actually increased with 26 employees already from year end, and we're now about to 72-71, and continue to increase the capacity in order to drive even further growth for us. And we've actually seen that digital onboarding is not as a big challenge as we thought it would going to be. It works quite swiftly for us. There's some things that it takes more capacity of current employees rather than that it's difficult to get new employees on board and being productive. So we see great benefits from the digitalization as well. Next slide, please. So in summary, we have a strong track record in delivering on growth of recurring revenue and executing on a strategy. Now when we're shifting strategy and going for more growth, we will be able to deliver and execute on that as well. We have a well-balanced customer base in the public sector and in the private sector, which makes us comfortable to make this investment in growth. We have a market-leading position, and we expect to see good growth in the market in general over the coming years, and we will gain market share in that growing market. The partnerships with Microsoft and the partnership with Temenos really paves the way for us in order to capitalize on the growth potential that is in there. So we see significant expansion driven by the investment in Lasernet product, and we see a rapid conversion towards SaaS, both in the private sector and the public sector. I think that was all from me. Next slide, please. Thank you.
Thank you, Christian, for that presentation. Let's continue this session with a couple of questions from my end. And starting off with the acquisition topic, which I believe is an interesting topic to address, given that it's often a fairly time-efficient way to grow earnings. And last year, you acquired one of your partners. How does your acquisition agenda look going forward? Are you looking for similar acquisitions in terms of partners, or would you like to acquire product companies? What is the current status here?
Yeah, I would say that we have two main M&A tracks, slightly different between the public sector business and the private sector business. We have an agenda in the public sector space of becoming the European market leader on digitalization of public sector to help the society to improve in digitalization and be really strong in that. I believe, or we believe firmly, that will come through acquisition of companies around Europe that are similar to Formpipe, i.e. have a strong back-end platform for supporting that specific country's legislation on public sector digitalization. So that is the main, to buy others that are strong on platforms. And then what the upsell opportunities, there are a lot of the platforms are quite mature, they're function rich, they're functioning well for the end customer, the municipality or the central government customer. However, a lot of things can be done outside of those, building apps for specific use cases like meetings administration of politicians or construction permits or things like that. That will be done in much swifter way with applications that is through integration is working towards those platforms. Building those add-on software. For example, we just recently launched a signature product, very much alike the Scribes and the DocuSigns, but the public sector space have higher security requirements and integration requirements and nationalization requirements that those guys, even though they're great signature products, cannot really doesn't really fit the requirements of the public sector. We built that and integrated towards our platforms and are now able to sell that to our entire customer base, regardless of which platform they're running. If we add on more such platforms around Europe, then that extra module or software could be addressed to bigger customer base. So that's the rationale behind that M&A track of the public sector. On the private sector space, I would say there's another type of product companies that we would like to pursue. It's not necessarily our own partners like the EFS acquisition, which had a product that we were really interested in, but they were a partner, so they were sort of the ideal candidate, since they both were a software company and knew Lasernet very well. However, there's not that many of those targets that we could pursue. We would rather find some other add-on component to Microsoft Dynamics or Temenos, because that's important to point out here. Lasernet is an add-on software to Microsoft Dynamics. And when an end customer buys Microsoft Dynamics, they normally buy they buy that through a system integrator who implements it, and that system integrator is our partner, and they probably bring along Lasernet plus a handful of other software that makes the Dynamics ERP platform stronger, and those other add-ons would be really interesting for us to buy. The purchase to payment process, whatever it could be, because they will most likely also have a partner network. And then we could cross sell in both ways here. Lasernet through that partner network, and that product that we're then acquiring through our partner network. And that would be double whammy in terms of synergies on the sales side. So that is the type of add-on softwares that we're really looking for.
Thank you. And as you described earlier, about 1/3 of your revenue stems from the private business, while you have 2/3 from the public sector. Are these businesses standing as separate units, or are there any synergies between them? How does that work out in your organization?
It's for sure synergies in terms of product development, purchasing power of offshore capacity, and so forth. And there's also a lot of knowledge sharing between the different business areas in our business. Commercially, however, we do sell to a very large extent sell different software to the public sector compared to the private sector. And stating the obvious, in public sector it's public sector customers, and in private sector it's international private sector customers. So the geography is also quite different between them.
Thank you. And you mentioned Lasernet, that it's an add-on, especially for Microsoft Dynamics and also for the Temenos banking system. Are there any other systems that you would like to increasingly work with? For instance, SAP or any other system? Could we hear you talk about more about other systems going forward?
Yeah, I might sound a little bit boring now, but it's not a top priority. Lasernet works super fine with SAP, but we don't have a strong footprint with SAP partners. And we have a strong footprint and help from Temenos and Microsoft in attracting new partners and driving that. And we're still a very small company, bear that in mind. And if we should focus our resources, right now I would say our focus is on Temenos and Microsoft. It could very well be in a year or two that we open up for another platform, and that could also be connected to an acquisition. If we acquire an add-on software, as I described, that actually has a strong footprint in the SAP world, for example, surely we would make sure that Lasernet fits into those partners' portfolio as well. And that could be the starting point for adding on a third track. But for now, we see so great traction on our Temenos and Dynamics channels that we want to keep focus on that rather than be too wide.
Makes a lot of sense. And speaking of, we already talked a little bit about net recruitment, and that you have kept a relatively high pace here in 2021. Should we expect a similar pace going into 2022, or have you made the recruitments that you were looking to do?
We're following our plan, and we will continue to add on more capacity, and we are, of course, continuously revisiting our plans. See, should we increase even further? Should we slow down a little bit on some area? What sort of people do we need, and talents or capacity do we need? We realized that we, in our initial plan, thought that we were going to have a lot of need of delivery capacity, while actually our partners around the world, they're quite happy to do delivery for us. And then we, as a software company, prefer not to have a lot of delivery capacity that generates delivery revenue. So we are a little bit shy on delivery people recruitment, and instead focus more on partner support and salespeople in order to help the partners to close deals. So we are revisiting the plans all the time, but I would say you should expect perhaps not as aggressive recruitment the next year as we've done the last 6 months, but not far from either. So that's the level I would say.
Thank you. Unfortunately, we are now run out of time out of this session, but a big thank you, Christian, for attending today. It was, as always, very, very nice to hear all your thoughts about your business, etc.
Thank you, Simon, and thanks everyone for listening. Please reach out to me if you want to follow up call or one-to-one or whatever. So I'm sure you will find my contact details through ABG. Thanks, Simon.
Thank you.